Is your money designed to lose value? Today, I'm going to show you why governments around the world are destroying their own currencies and how assets like Bitcoin are becoming a necessary escape route, not just a wild speculation. Japan's new prime minister just found a creative way to say they're going to print more money, causing the yen to plummet. This is a red flag for the entire global system, and it explains why BlackRock's CEO is making some shocking predictions about crypto. Let's start with what's happening in Japan, because it's a preview for the rest of the world. Their new prime minister is talking about a responsibly aggressive fiscal policy. Whenever a politician uses two words that contradict each other, pay attention. What she's really doing is redefining how they measure debt. It's an accounting trick. Imagine you have a massive credit card bill, and you decide to only count the minimum payment as your real debt. It makes you look less broke, but you're actually sinking faster. That's what Japan is doing to justify issuing even more debt and printing more money. And what's the result? The Japanese yen is dying. It's in free fall. This isn't a theory. You can see it on the charts. This is what happens when a government chooses the printing press over fiscal discipline. The old monetary order, where we trusted these currencies, is collapsing before our eyes. And it's not just the yen. Look at the US dollar against gold. The dollar is falling vertically. Fiat currencies, those pieces of paper issued by governments, are fundamentally trash in the long run because they can be printed into oblivion. If you're starting to see the cracks in the traditional system, make sure you subscribe to this channel. We cover these shifts every week so you can stay ahead. So, if government money is losing its value, where are people going? They are running to hard assets. A hard asset is something with a limited supply that a government can't just create out of thin air. Think gold, quality companies, and of course, Bitcoin and Ethereum. The recent rise in these assets isn't euphoria. It's not a speculative party. It's a hedge. It's a flight to safety from the disastrous policies we just talked about. People are not buying Bitcoin to get rich quick. They're buying it to not become poor slowly. Bitcoin is becoming the natural currency for anyone escaping the fiat system. Now, this brings up a huge debate. Will you one day buy your coffee with Bitcoin? Will it replace the dollar? My take is no, not anytime soon. Let's be realistic. Right now, it's more expensive and less convenient for small, everyday transactions. Your credit card is faster and cheaper for buying a sandwich. The extra benefit of using Bitcoin for that is practically zero. But Bitcoin's real power isn't in buying coffee. It's in something much, much bigger, which I'll explain right after we look at what the big institutions are doing. The game changed when the big money showed up. Larry Fink, the CEO of BlackRock, the largest asset manager in the world, is on record predicting the total crypto market cap could grow significantly. He's not talking about a small jump. He's talking about a potential tripling or more. This isn't just talk. BlackRock and other giants have launched Bitcoin ETFs. An ETF, or Exchange Traded Fund, is basically a product that makes it super easy for large investors to buy Bitcoin, and they are buying in massive quantities. This creates a potential supply shock. A supply shock happens when demand for something explodes, but the supply stays fixed. There will only ever be 21 million Bitcoin. With these ETFs buying up thousands of coins a day, the available supply is shrinking fast. It's simple economics. When massive new demand chases a strictly limited supply, the price is pressured to go up. This brings us back to Bitcoin's true purpose. Its utility isn't as a medium of exchange for daily life. Its true, incomparable utility is as a store of value. It's a reserve asset for a worst-case scenario. Think of it like a fire extinguisher. You don't use it every day, but you are incredibly grateful you have it when the house is on fire. Right now, the house of fiat currency is starting to smoke. This leads to the most important question, especially for younger generations. Look 30 or 40 years into the future, to your retirement. What will you trust more for your pension? A government's monetary policy, which has a track record of devaluing its currency to pay its debts, or a decentralized digital asset with a fixed supply that no one can manipulate? This isn't about getting rich overnight. It's about understanding the fundamental shift that's happening in our economy. If you want to keep learning how to protect your wealth, hit that subscribe button. Now, I want to know your thoughts. For your long-term savings, who do you trust more, governments or code? Let me know in the comments below.